The net profit is harder to predict because that's heavily influenced by your marketing performance and also the general setup of your business. There are quite a few levers that you can pull to adjust what your net margin ends up being. So you could be an absolute wizard with Google Ads and store design and, making your store as high CRO as possible.
Are you tempted by the world of dropshipping, but you feel puzzled by the allure and all of the talk about revenue? Well, let me let you in on an industry secret. It's not all about revenue. Instead, we need to focus on the profit. And in today's episode, that's exactly what Lewis and I are going to be doing. So whether you're already running a dropshipping business or if you're crucially thinking about starting a dropshipping business, let's talk about today how we can help people to think not just about the money that's coming into your business, but how much can you actually keep in your pocket at the end of the month and at the end of the year. So, Lewis, let's kick things off. Where would you say the typical sort of profit margins are for a dropshipping business?
Absolutely. Yeah. So just to be clear, before we jump into that, profit margin is basically the percentage of revenue that actually ends up being your profit. So think of it as kind of the slice of the pie that you actually get to keep after all of your expenses. So sales revenue is the thing that you see as your top line. That's your sales that have come into the business. If you make a £1,000 sale today, you now have a sales revenue of £1,000. But that obviously only tells half the story, because then you'll need to pay your supplier for the cost of those goods. And maybe you had some ads that you have to pay, and potentially you have a virtual assistant and a bit of software like Shopify, things like that you might have to pay. So the difference between your net and gross margins as well is something that we should explain. So your gross margin is what you agree on with your supplier. So that's the margin that they will give you on paper. It's basically the revenue minus the cost of goods sold. Well, that's often abbreviated to COGS. You'll see that as. And net margin is a little bit trickier to calculate, because that's what remains after all of your operational costs have been deducted from the equation as well. Things like your marketing spend, and your software fees and your phone line, things like that have all been accounted for. That's what you're left with, your net margin. So in terms of a typical gross margin, to answer your question, James, using our home turf advantage strategy, we typically see around 30%, we'd say is kind of average. I mean, you'll see like examples of people with margins of 40% or even 50% gross margin. And sometimes that depends on the relationship that they've built with the brand and the supplier. Over time, they might get an even better margin. Perhaps when the supplier has some stock that they're really trying to move and they want to incentivize their retailers, such as ourselves, to sell it, then they might offer an even healthier margin. So we've seen margins up to 50% gross margins. So that's the slice that you're negotiating with the suppliers. The net profit is harder to predict because that's heavily influenced by your marketing performance and also the general setup of your business. There are quite a few levers that you can pull to adjust what your net margin ends up being. So you could be an absolute wizard with Google Ads and store design and making your store as high CRO as possible, so your conversion rate optimization could be really good. So every single visitor that comes to the store, there's a high likelihood that you can get them to purchase because you've created such a compelling and frictionless store design. Or you might just still be learning the ropes and kind of have a very basic version of all of those things. And the nice thing is there's enough buffer and enough profit in cash in these high ticket sales that it works for both advanced experts and complete beginners. That's why it's such a beginner friendly business model. And over time, you'll only see that percentage increase as you get better and hone your skills as well. So that will really sway your net margins. So yeah, it's crucial to know your numbers from the get-go. Of course, you want to have a really firm grip on these numbers because that will guide every single business decision that you then make from then on out, from negotiations with suppliers to ad spend and how much to spend per sale to acquire it.
Yeah, absolutely. So it is crucial to touch on that, because I think probably your most important job as a business owner will be to know your numbers, and crucially to know that bottom line number and how much profit or loss your business is making when you first get up and running. So that is something that we need to touch on. And I appreciate as well touching on all of the different definitions within profit. As the gross profit, when I asked you that question about what the typical margins, very difficult to predict the net profit. However, the gross profit, typically I see around a 30%, but recently it's probably up to 35% within my business. But the net margin, it's harder to predict It's simple to say 30% gross profit, 20% net profit, but fortunately with the nuance that we can add with this podcast, we can add so much more to that to actually understand how we get to those figures and where your business would be depending on the decisions that you make. So let's really dive into this, Lewis. I know it's always been clear to me the way that you and Dropship Unlocked talk about revenue and profit is always to give people the clear and honest picture of what it's like to run a business, not about a get-rich-quick scheme, and you never do ads standing in front of a Lamborghini for that reason. So that's talk about now. How can we improve our profit margins, and how do you make sure that you are understanding the numbers that you're working with and improve that profit margin as much as possible?
Sure. So there are several factors that you are in control of, and it's worth noting that we are dropshipping, and therefore we're placing orders with our suppliers on a one-by-one basis, right? So we're not buying lots of stock up front. So suppliers will always offer a better margin when you order larger quantities. I mean, 99% of the time that's going to be the case, and so would you if you were a supplier and someone said, hey, I'll buy 100 units of this item. Of course, you'd want to incentivize that, right? So you would give a better margin to them. And that's fine. But it depends on what kind of business you want, because you can either just get really frustrated and angry about that fact and say, as a dropshipper, I'll never get as good a margin. But I mean, you choose what type of business you run, right? Some of our members at Dropship Unlocked have gone on to hold stock because they've said, I realize I could make an extra maybe 10% margin on this or 15% margin on this. So they thought, hey, I really want to squeeze as much profit margin from every single sale as I can. Therefore, I'm going to maybe get a facility, get a warehouse, or use a third-party logistics company and actually hold some stock. And they almost evolved the model from just dropshipping into dropshipping and building a brand and holding stock. Others have they're more of a focus on not having to deal with logistics and having their money tied up in stock, and they just prefer to keep it as pure dropshipping because it lends itself better to the type of lifestyle that they want. They want the freedom, they want the autonomy, they don't want that liability or the ties of knowing they have lots of money tied up in stock. So it's a bit like, imagine if I said right now I'm going to go and sit on a bench outside and have a cup of coffee, right? The experience that I'm trying to create there is to just enjoy the time sitting on the bench in the sun having a cup of coffee. Yes, I could probably get the coffee cheaper if I went and bought a whole pot and the beans wholesale, and I'll end up paying more per cup if I go and just buy a coffee from a barista, for example. But if your aim is to go and sit on the bench in the sun and enjoy your day, and the coffee is just part of that experience, then yeah, of course you could get it cheaper if you bought the whole pot, but that's part of the equation. You might just want a nice latte in the sun, and it's the same. If you're happy to pay a little bit extra in your business for that freedom of being able to keep it pure dropshipping, that's okay. It doesn't, you don't always have to chase just the profit. Like there's a kind of an enjoyment balance that needs to be found, I feel, and I believe that a big part of this is create the kind of business that you want to run for the long term. Don't just chase the profit at all costs. That you may be the complete opposite, that you may decide that you do want to go after every penny of profit. And yeah, so it's completely up to you with that.